Most traders think the reason they can't stick to their trading plan is because they lack discipline. They watch motivational videos, read more books, try to force themselves to follow the rules. But when it's time to take that losing trade or cut that position, their mind sabotages them. Here's what they're missing. Your brain isn't broken, and you don't need more willpower. Ancient Eastern philosophy, specifically the Lotus Method used by monks for centuries, reveals that resistance isn't your enemy, it's a signal. The Buddha taught that your own unguarded thoughts can harm you more than any market move ever will. In this video, I'll show you how to stop fighting your mind and instead work with its natural design so you can execute your strategy without the constant internal battle. This isn't about motivation that fades by tomorrow. It's about rewiring how you approach difficult trading decisions, using awareness, flow, and stillness instead of brute force. By the end, you'll understand why forcing yourself harder only makes trading harder, and what to do instead. Welcome to Trader's Bible, the quiet room for market mastery. Let's get into it. Let's start with what actually happens in your brain the moment you see a trade setup forming. Your eyes scan the chart. The pattern is there. Your rules say enter, but your finger hovers over the mouse. Something whispers, "What if this one's different? What if I'm wrong?" That whisper isn't weakness. It's your monkey mind, and every trader has one. Eastern monks recognized this phenomenon thousands of years ago. They observed that the human mind behaves like a wild monkey, swinging from branch to branch, never resting, constantly seeking the next source of comfort or distraction. In trading, this monkey doesn't swing between trees. It swings between fear and greed, between overconfidence after a winner and paralysis after a loser. The Buddha's teaching about unguarded thoughts isn't poetic philosophy. It's a diagnostic observation. Your mind, left unmonitored, will actively work against your best interests. Here's where most traders go wrong. They see this mental resistance and immediately try to crush it with discipline. They tell themselves to be stronger or just follow the plan. But this approach is like trying to calm a wild monkey by yelling at it. The monkey doesn't calm down. It gets more agitated, more erratic. Your brain is biologically designed to avoid discomfort. Taking a trade with real money triggers the same neural pathways as physical danger. Your amygdala, the ancient part of your brain responsible for survival, doesn't distinguish between a potential $500 loss and a potential physical threat. To that part of your brain, clicking the buy button when you're uncertain feels like stepping toward a cliff edge. So when you sit down to trade and your strategy gives you a clear signal, but you hesitate or skip it entirely, you're not being undisciplined. You're being human. Your brain is doing exactly what evolution designed it to do: protect you from perceived danger. The problem is that this protective mechanism, so useful for keeping our ancestors alive on the savannah, becomes a saboteur in the context of probabilistic trading, where some level of risk and discomfort is necessary for success. The first step in the Lotus Method isn't to fight this resistance, it's to see it. Before you even open your trading platform, take 2 minutes to simply observe your current state. Are you feeling anxious about yesterday's loss? Are you eager to make back what you lost? Are you feeling invincible after 3 winners in a row? None of these states are wrong, but they're all dangerous if left unobserved. The act of awareness, just noticing without judgment, begins to change your relationship with these thoughts. You stop being the monkey and become the observer of the monkey. Most traders skip this step entirely. They go straight from their morning coffee to staring at charts, bringing whatever emotional baggage they're carrying directly into their decision-making process. Then they wonder why they keep breaking their rules. The answer is simple. You can't follow a plan you're not mentally present enough to remember. Awareness creates the space between stimulus and response. Between seeing a setup and clicking the button, there's now a conscious moment where you can choose your action, rather than react from your monkey mind. But awareness alone isn't enough. You can be perfectly aware that you're about to revenge trade and still do it anyway. This is where the second principle comes in: strategic non-resistance, or what the ancient Taoist philosophers called Wu Wei. The literal translation is effortless action or non-doing, but it's widely misunderstood. Wu Wei doesn't mean being passive or lazy. It means aligning your actions with the natural flow of what's happening, rather than forcing outcomes through brute strength. In trading, Wu Wei looks like this. The market is ranging, chopping sideways, giving no clear directional bias. Your monkey mind says, "I'm wasting time. I need to make money today. I should take something." Wu Wei says, "The market isn't providing opportunity right now. The action is to do nothing." Most traders struggle with this because modern culture has conditioned us to believe that more action equals more results. But the Taoist masters understood something profound. Pushing against a river doesn't make it flow faster. It just exhausts you. When you force trades that aren't there, the market has a way of pushing back. You overtrade and rack up commissions. You overleverage and get stopped out on normal volatility. You chase price and enter at the worst possible moment. This isn't bad luck. It's the natural consequence of acting in resistance to what is. The market doesn't care about your bills, your monthly profit target, or your need to feel productive. It moves according to its own rhythm, driven by the collective actions of millions of participants. Your job isn't to impose your will on the market. Your job is to wait for moments when your edge aligns with what the market is actually doing. Then act with precision. Think about how much energy you've wasted trying to force the market to give you what you want. How many times have you held a losing position longer than your rules allowed because you needed it to come back? How many times have you jumped into a trade without proper confirmation because you were afraid of missing out? That's resistance. That's you pushing against the river. Wu Wei is the opposite. It's saying, I'll trade when conditions align with my strategy, and I'll do nothing when they don't. This isn't laziness. It's strategic patience. The practical application is deceptively simple, but psychologically difficult. Each morning, before you look at charts, ask yourself, am I going to trade today because the market is giving me setups? Or am I going to trade today because I feel like I should be doing something? If the honest answer is the latter, close your platform. Go for a walk, read a book, do literally anything else. The market will be there tomorrow, and it will present opportunities when conditions are right. This act of non-resistance, of not forcing, is how you begin moving with the market's current, rather than exhausting yourself swimming against it. Now, if you're finding value in this approach to trading psychology, do me a favor and tap that subscribe button. This channel exists to bring you contrarian insights that actually work, not recycled motivation that fades by Monday. Turn on notifications so you don't miss the next one. And if this perspective is shifting how you think about your trading, leave a like to help other traders find this content. The algorithm rewards engagement, and your simple click helps us reach more people who need to hear this message. Let's go deeper. You've cultivated awareness of your monkey mind. You've learned to move with the market rather than force it. But there's still a problem. Even when you're aware and aligned, your mind can still be noisy. Thoughts bounce around, worry about the news, replaying yesterday's mistake, calculating what you could buy with this month's profits. This mental noise creates what Zen Buddhism calls a scattered mind, and a scattered mind cannot see clearly. This is where Zazen enters. Zazen is sitting meditation, but it's not what most Western traders think meditation is. It's not about achieving some blissful state or emptying your mind of all thoughts. It's about cultivating what Zen masters call the neutral mind, a state where you can observe what's happening without the filter of hope or fear, without attachment to outcome. The Zen master Dogen taught, if you can't find the truth right where you are, where else do you expect to find it? In trading terms, if you can't see the chart clearly in this moment, refreshing it or checking another time frame won't help. Most traders approach their screens in a state of constant internal commentary. They look at a candlestick and immediately overlay it with meaning. This could be the reversal I've been waiting for, or this looks like it's going to trap me again. These aren't observations, they're projections. They're your monkey mind creating narratives that have nothing to do with what the price is actually doing. The chart doesn't know your hopes. It doesn't care about your fears. It's simply data. Buyers and sellers reaching temporary equilibrium at specific price levels. The practice of Zazen teaches you to see charts as they are, not as you need them to be. When you look at a setup through a neutral mind, you're not asking, will this make me money? You're asking, does this meet my criteria? The first question is outcome-focused and creates attachment. The second question is process-focused and creates clarity. This shift seems subtle, but it's the difference between emotional trading and mechanical execution. Here's the practical application. Before you execute any trade, take 3 conscious breaths while looking at the chart. Don't analyze during these breaths. Don't plan. Just breathe and observe. Notice the pattern. Notice your reaction to the pattern. Notice the gap between the two. This 15-second pause creates what Zen calls trading stillness, a moment where your mind settles enough to see clearly. In that clarity, the right action becomes obvious. Either the setup meets your rules, or it doesn't. Either you have an edge, or you don't. The neutral mind doesn't deliberate or second-guess, it sees and acts. But seeing clearly is only half the equation. You can have perfect clarity about what to do and still fail to execute. This is where the Shaolin principle comes in. Intentional action. The Shaolin monks didn't just meditate for hours. They trained their bodies to act with the same precision as their minds. They understood that mental clarity without physical execution is useless, and physical execution without mental clarity is chaos. True mastery requires both. In trading, this means treating every single execution like a martial artist treats a kata, a preset sequence of movements performed with total presence and precision. You don't sloppily throw your stop-loss somewhere around a level. You place it at the exact price your strategy dictates. You don't kind of follow your position sizing rules. You calculate the exact share size for your risk tolerance. You don't emotionally adjust your take-profit target based on how the trade is going. You set it according to your plan and let the market do its work. Most traders have a split between their trading plan and their actual trading. The plan lives in a document or in their head, full of good intentions and sound logic. But when it's time to click the button, a different version of them shows up. One that's reactive, emotional, improvisational. The Shaolin principle says these two versions must become one. The trader who plans and the trader who executes must be the same person, operating with the same clarity and intention. This is why the Shaolin monks emphasize that action without reflection leads to burnout, and reflection without action leads to stagnation. You need both. You need the Zazen practice to cultivate clarity, and you need the discipline to translate that clarity into precise execution. One trade at a time. One setup at a time. Not scattered across 12 positions and 3 different strategies, but focused with singular intention on the opportunity in front of you right now. Now here's where most traders hit their next wall. They do everything right. They cultivate awareness. They move with the market. They execute with precision. And they still lose. They hit a string of stop-outs. The strategy that worked last month stops working this month. Drawdown begins. And in that moment, all the calm philosophy goes out the window. The mind screams, "This doesn't work. I'm doing something wrong. I need to change something now." This is where the lotus teaches its most important lesson. The lotus flower grows in mud, thick, dark, uncomfortable mud. It doesn't avoid the mud or try to grow somewhere cleaner. It uses the mud. The nutrients from that decomposing matter feed the root system that eventually produces one of nature's most beautiful blooms. But here's the key. The lotus doesn't rush. It doesn't try to bloom while it's still pushing through the mud. It accepts that the mud is part of the process. Your losing trades are the mud. Your drawdowns are the mud. The times when nothing seems to work, that's all mud. And just like the lotus, you have a choice. You can curse the mud. Try to escape it. Abandon your strategy and search for cleaner ground. Or you can recognize that the mud contains exactly what you need to grow. Every losing trade that you review with calm, objective analysis teaches you something about market behavior, about your strategy's limitations, about your own psychology under stress, but only if you don't run from it. Most traders treat losses like personal failures or signs that their approach is broken. They avoid reviewing losing trades because it feels bad. But the Lotus Method reframes this entirely. Losses aren't obstacles to your growth. They're the raw material of your growth. The trader who learns to sit with the discomfort of a drawdown, to analyze their mistakes without self-judgment, to extract lessons from pain, that's the trader who eventually blooms. Not because they avoided difficulty, but because they used it. The practical process is simple but emotionally challenging. Review your losing trades with the same neutral energy you bring to your winning trades. No drama, no self-criticism, no justification. Just observation. What did the setup look like? Where did you enter? What was your thesis? What actually happened? What can you learn? Treat each loss like data, because that's exactly what it is. The mud doesn't become a problem until you resist it. When you accept it as part of the growth process, it becomes fuel. But even with all of this, the awareness, the flow, the stillness, the intentional action, the acceptance of adversity, there's one final obstacle that destroys more trading accounts than any technical mistake: impatience. You've been doing everything right for 3 weeks, maybe 3 months, and you're not consistently profitable yet. The voice starts again. This is taking too long. Other traders figured it out faster. Maybe I'm not cut out for this. This is where the lotus teaches its final and most difficult lesson. The art of the slow bloom. The lotus doesn't bloom in a week. It grows slowly, pushing through layers of mud and water, developing its root system, building strength in darkness before it ever breaks the surface. And when it finally blooms, it does so in its own time, not according to anyone's timeline or expectation. Rushing the process doesn't create a faster bloom. It kills the plant. Your timeline for trading success is competing with social media highlight reels and get-rich-quick fantasies. You see someone claim they went from 0 to 6 figures in 6 months, and suddenly your steady progress feels like failure. But the Lotus Method asks a simple question. Would you rather bloom fast and wilt, or grow slowly and last? Impatience in trading doesn't speed up your development. It creates internal resistance that leads to rule-breaking, account-blowing, strategy hopping, and ultimately quitting. The practice of patience isn't passive waiting. It's active trust in the process. It's saying, I will show up every day, follow my rules, review my trades, refine my edge, and trust that the bloom will come when the foundation is ready. You can't force a flower to bloom by pulling on its petals. You can't force yourself to consistent profitability by abandoning your strategy every time you hit a rough patch. The soil, the water, the sun, the time, all of these elements must come together. Your job is to tend the garden, not to demand immediate results. So here's what changes when you embrace this final principle. You stop measuring your success by this week's P&L and start measuring it by process adherence. Did you follow your rules today? Did you review your trades? Did you manage your risk properly? If yes, then today was successful, regardless of whether you made or lost money. This shift in how you define success removes the impatience. You're no longer waiting for some future moment when you'll finally make it. You're already successful in this moment if you're honoring the process. The lotus blooms when it's ready. Your consistent profitability will come when your skill, psychology, and experience align. You cannot rush this, but you can trust it. And in that trust, the resistance finally dissolves. You're no longer fighting yourself, fighting the market, or fighting time. You're simply growing. One trade at a time, one day at a time, moving through the mud with the quiet confidence that your bloom is coming. Now you understand the complete Lotus Method, but understanding isn't the same as application. In the next section, we're going to break down exactly how to implement this in your daily routine. Because knowing these principles means nothing if you don't have a system to practice them consistently. Let's talk about implementation. Because philosophy without practice is just intellectual entertainment. You can understand every concept in the Lotus Method and still blow your account if you don't build these principles into your actual trading routine. Here's what most traders do. They get inspired by a video like this, feel motivated for about 48 hours, maybe try meditating once or twice, then slide right back into their old patterns. The monkey mind returns. The forced trades come back. The impatience resurfaces. Why? Because they tried to add Eastern philosophy on top of their existing chaos instead of integrating it into the foundation of how they trade. The Lotus Method isn't something you do before trading. It is your trading, Every principle we've covered needs to become automatic, woven into your pre-market routine, your execution process, and your post-trade review. Let's break down exactly what this looks like in practice. Start with your morning routine. Before you look at a single chart, before you check what happened in the Asian or European session, sit for 5 minutes in silence. Not scrolling your phone, not listening to a podcast, just sitting. This isn't mystical, it's practical. You're training your mind to be still before you ask it to make high-stakes decisions. Those 5 minutes create the foundation of awareness. You're checking in with your mental state the same way you'd check your internet connection before a video call. Are you anxious, overconfident, distracted? Just notice it. No judgment, no fixing, just awareness. After those 5 minutes, write down 3 things: your emotional state, your energy level, and your intention for the session. Not your profit target, your intention. Something like, I will only take setups that meet all 5 criteria, or I will practice perfect position sizing today. This sets your mind on process, not outcome. You're priming yourself to trade with intention rather than reaction. Now you open your charts. But here's the key difference. You're not hunting for trades. You're observing the market. Spend the first 10 minutes just watching price move without any agenda. No analyzing, no planning entries. Just observe. What's the market doing? Is it trending or ranging? Is volatility expanding or contracting? Where's the liquidity? This is Wu Wei in action. You're letting the market show you what it wants to do instead of projecting what you want it to do. Only after this observation period do you start looking for setups. And when you spot something that looks like an opportunity, here's your execution checklist. Does it meet all your entry criteria? If no, close the chart. If yes, take 3 conscious breaths while looking at the setup. During those breaths, notice any emotional pull, eagerness, fear, doubt. Don't act on these emotions, just acknowledge them. Then, if the setup still qualifies, execute with precision. Entry price, stop loss, position size, take profit, all placed exactly according to your plan, like a Shaolin monk performing a kata. After you're in the trade, here's where most traders sabotage themselves. They watch every tick. They refresh the P&L constantly. They imagine what they'll do with the profits or catastrophize about the loss. This is scattered mind at its worst. Instead, once your trade is live with all parameters set, close the platform. Walk away. The trade will either hit your stop or your target. Your watching it doesn't change the outcome. It only clouds your mind for the next decision. This is the hardest part of the Lotus Method for active traders to accept. Less screen time often leads to better results. The neutral mind can only stay neutral when it's not being bombarded with every price fluctuation. You've done your analysis, executed your plan. Now practice Zazen by letting the trade unfold without attachment. Set an alert if you need one, but free your attention from the outcome. At the end of your session, here's your post-trade routine. Open your journal and review every trade you took. Not just the P&L, but the process. Did you follow your rules? Where did you feel resistance? What was your emotional state during execution? Rate each trade on process adherence, not outcome. A losing trade that followed your rules perfectly is a successful trade. A winning trade that violated your plan is a failed trade. This is how you train your brain to value process over results. Here's the part most traders skip. Also journal the trades you didn't take, the setups you passed on because they didn't quite meet your criteria, the moments you felt the urge to force something, but practiced Wu Wei instead. These non-trades are just as important as your actual trades because they represent your growing discipline. The lotus grows in darkness before it blooms. Your restraint in the mud of temptation is what builds the root system of consistency. Now about those losing streaks. When you hit a drawdown, and you will, this is where the Lotus Method gets tested. Your monkey mind will scream that something needs to change immediately. Resist this. Instead, do a deeper review. Are you actually following your plan, or have you been subtly deviating? Is the market environment still suited to your strategy? Are you in a normal drawdown that's within your expected variance? If you're following your rules and the drawdown is statistically normal, the correct response is patience. This is the mud. This is where most traders quit, right before the bloom. Your job isn't to change strategies or force different results. Your job is to keep showing up. Keep following process. Keep tending the garden. The market will reward consistent execution over time, but it won't do it on your schedule. If your review reveals you've been breaking rules or the market regime has genuinely shifted, then adjust, but slowly, methodically, without emotion. Make one small change, test it over 20 trades minimum, then evaluate. Jumping from strategy to strategy is the opposite of the Lotus Method. That's not patience, that's panic. Here's your weekly practice. Every Sunday, review the entire week. Not trade by trade, but patterns. Did you notice repeated emotional triggers? Did certain market conditions cause you to deviate from your plan? Are you seeing growth in your awareness and discipline, even if the P&L doesn't reflect it yet? This macro view helps you see the slow bloom happening beneath the surface. The truth is, most traders fail not because they lack a good strategy, but because they can't execute any strategy consistently. Their monkey mind wins. They resist the market. They chase results. They give up in the mud. The Lotus Method doesn't give you a better strategy. It gives you a better relationship with your own mind. And that relationship is what determines whether you survive long enough to become consistently profitable. You now have the complete framework: awareness before action, non-resistance to market flow, stillness for clarity, intentional execution, acceptance of adversity, and patience for the bloom. But knowledge isn't transformation. The only question that matters now is, will you actually practice this? Or will you go back to forcing, fighting, and burning out? The lotus doesn't force itself through the mud. It grows through it, slowly, patiently, using the very thing that could drown it as fuel for its bloom. Your trading journey is no different. The hard things, the losses, the drawdowns, the psychological battles, these aren't obstacles. They're the mud, and if you stop resisting them and start growing through them, your bloom is inevitable. That's the Lotus Method. Now go tend your garden. You came here thinking you needed more discipline to stick to your trading plan, that if you just pushed harder, forced yourself to follow the rules, somehow your brain would fall in line. But now you understand the truth. Your brain was never the problem. Fighting it was. The Lotus Method showed you that resistance isn't something to overpower. It's something to work with. We covered the monkey mind and why awareness, not willpower, is your first step. We explored Wu Wei, the art of moving with the market instead of forcing trades that aren't there. You learned how Zazen creates the neutral mind that sees charts clearly without the filter of hope or fear. We applied the Shaolin principle, translating stillness into precise, intentional action. And finally, you discovered that losses aren't failures. They're the mud the lotus grows through, and that your bloom will come in its own time, not according to some arbitrary timeline you've imposed on yourself. The hard things in trading don't get easier, because you force them. They get easier when you stop fighting yourself, when you align with what is instead of resisting it, when you trust the process instead of demanding immediate results. So here's what I want you to reflect on. Where in your trading are you still pushing against the river? Where are you trying to force the bloom instead of tending the roots? The answers to those questions will tell you exactly where to start applying what you learned today. The lotus grows slowly, but it grows. And so will you.